Welcome to the fundamentals of Bitcoin on-chain analysis and valuation. I'm Bitmaniac on Twitter, and I'll be your host. So why should you care about Bitcoin on-chain analysis? Well, it's very simple. Bitcoin is very different to traditional assets. For example, it doesn't generate income or doesn't generate cash flow like stocks, bonds, or real estate. And that makes it very difficult for many people to understand how to analyze and how to value Bitcoin. So that's where on-chain analysis comes in. Because the Bitcoin blockchain is an open and a transparent system, on-chain analysis gives an in-depth understanding into what's going on inside the Bitcoin ecosystem, and all of this in real time. So it's almost like having superpowers. It's a real-time view into this new economy, and it's a toolkit for better investment decision. So who is this for? Well, it's definitely for you if you are a trader and short-term investor. Combined with traditional technical analysis and fundamental analysis, on-chain analysis will give you an edge. It's a very new field, and few people really understand how to read on-chain signals, giving an advantage to those who do. On-chain analysis is also very important for long-term investors. If you're like me, you have money invested in Bitcoin, or if you want to increase your position, then you really need to understand if the Bitcoin network is healthy, how fast adoption is growing, and overall, what is the sentiment of other participants. Finally, on-chain analysis is useful for many other market participants. Users, miners, observers. You'll make better, more informed decisions when actually understanding what's going on under the hood. So I believe this new science will go mainstream in the future, so you might as well get ahead of the curve. So who am I? I'm Bitmaniac on Twitter. In terms of my background, so I have a degree in electrical engineering. I went to business school. I've worked in investment banking and consulting. Then I moved to the tech world. I got involved with a few tech startups and also worked for a big e-commerce company for about 5 years. But more importantly, I'm just a Bitcoiner. So I bought my first Bitcoin in 2013. I didn't think too much about it at the time. I was just speculating, and then I got really sucked into that world in 2017. I don't consider myself an expert in on-chain analysis. I am just a humble student of this new field. And actually, I don't think there are many experts. This space is too new. It's moving too fast. So I was looking for a book or some kind of course to learn about on-chain analysis, but I couldn't find one. And so I started documenting my research and learnings along the way. And then I realized that others could be interested and benefit from this as well. So I decided to put this course together. I hope you enjoy it. If you want to get in touch, send me some feedback. Ask any questions. Again, I'm Bitmaniac on Twitter. Just hit me up and it'd be great to connect. What are you going to learn from this course? Well, I think you're going to learn three main things. First of all, you'll discover the key on-chain metrics and learn how to make sense of them. You'll learn how to extract valuable investment signals from the blockchain. The second thing you will learn is how to time the market and identify when Bitcoin is under or overvalued relative to previous cycles. That will help you decide how much you should allocate to Bitcoin, if it makes sense to hedge your position, and so on. And finally, you'll learn how to analyze the sentiment of market participants. What are the whales doing? Are hodlers still bullish? How are miners feeling? How strong is the current institutional and retail demand? How does all of this tie up together, and what does it mean? So you'll be able to start making sense out of all of this and using it to your benefit. So a few words of warning before we get started. First of all, I'm not your financial advisor, obviously. The whole purpose of this course is for you to learn how to analyze the Bitcoin network and form your own convictions. And so the more you learn, the stronger your conviction will become, and as I said earlier, the better you'll sleep at night. Also, I want you to watch out for manipulation. I'll talk about this more in detail in a few minutes, but just remember that interest in on-chain analysis is booming, and more eyes are looking at these signals, and naturally that creates temptation for market manipulation. Sometimes I hear people say, on-chain metrics don't lie. And honestly, I think that's terrible advice. My advice is always be critical of everything you see. On-chain metrics are no different. Please also remember that this isn't an exact science. It's evolving quickly. Data providers sometimes have different data sets because their methodologies are different. So don't be surprised if you spot discrepancies. And finally, as you go through the different chapters of this course, particularly chapter 3, your brain might switch between two somewhat conflicting states. On the one hand, you're going to look at all of these indicators and metrics that have been very powerful at timing the past three cycle tops and bottoms, and you're going to be tempted to believe that history is going to repeat itself again. And then on the other hand, there's a whole school of thought around the super cycle that argues that this time is different, and it's also a very attractive narrative. So my advice is just to be mindful of all of these intellectual shortcuts and temptations, and always to say very critical. So I'm going to use several resources in this course. Now, obviously, you can always run your own node and extract the data yourself, but let's be honest, right? It's so much easier to use some of these third-party tools that exist today. So here's a list of useful websites which I've compiled. You'll find the links in the show notes. I am going to use Glassnode a lot throughout this course, but Coinmetrics, CryptoQuant, and others are also great resources. Coinmetrics lets you download the CSV with data, and that's quite useful if you want to play around with the data by yourself in Excel. And some of these are completely free. Others have a freemium model. I'm not going to discuss pricing and features because that changes all the time. And if you're a bit tight, maybe you spend all of your cash on Bitcoin already, well, you can actually get a lot of the information for free by working your way through the various sites and combining all of these resources together. Also, there are several free newsletters out there that cover on-chain analysis. I've listed here some of my favorites on the right-hand side. They're free. It's great to see how other people look at on-chain signals and how they, what the thought process is. So I really recommend you sign up, and I think you will learn a lot. So I wanted to share how I got interested in on-chain analysis. So this is my personal story. So as I said earlier, I did my first speculative buy in 2013, but I only really fell into the proverbial rabbit hole in 2017. And that's when I started stacking sats and doing a lot more research. And so the bubble popped early 2018, as you know, and obviously it was disappointing for me that the price had crashed, but because this was already my second bear market, I felt pretty confident that the market would recover. And so I was monitoring the news and trying to figure out when the price would bottom. And also at the time, I was keeping a journal. I was writing down my thoughts, and every time I would buy some kind of asset, I would write down why. So nothing fancy, just something to keep me accountable and potentially help me learn from my mistakes down the line. So here's a screenshot of an entry that I took on the 15th of Jan 2019. It was just a Word document. And at the time, I was monitoring Bitcoin transaction volume pretty closely. And I didn't know anything about on-chain analysis back then. I was just looking for fundamental network data, and transaction volume happened to be the only metric that kind of made sense to me. So as you can read here, we're in early Jan 2019, and basically what I was saying was, well, it looks like the price was down 80% from all-time high. However, I'd noticed that daily transaction volume had been going up steadily over the past several months, and surprisingly, they were almost getting closer to all-time high. And for me, it was a sign that Bitcoin wasn't dead. On the contrary, you could argue that adoption was growing. And now I didn't know what people were doing with Bitcoin, if they were buying drugs or using it as a store of value, but people were using it, and that's what mattered. At the same time, the market was still extremely bearish. The news flow was extremely bearish. And so taking a very contrarian view with all this information, based on the fundamentals, it felt like it was the right time to get back in. And so that's when I started buying Bitcoin again. And now, of course, with hindsight, now that we're in 2021, we know that Jan 2019 was the bottom of the market. And so it was a great time to start accumulating. Now, don't get me wrong. I'm not saying this to insinuate that I'm some kind of genius. I'm really not. And clearly, you could argue I got a bit lucky as well. But I wanted to share this with you because I think it's an example of thinking from first principles and making an investment decision that's based on on-chain data. And I think the more you do that, instead of following the hype, instead of following some bullshit YouTube influencer, the more successful you'll be. I mentioned earlier I was going to say a few words on manipulation. So what I want you to remember is that on-chain analysis is getting a lot of traction these days. More and more people looking at this. More tools are available, and this makes information easier to access. All of that is great. But the downside is that all of this awareness has created opportunities for some people to try and manipulate the Bitcoin price through these on-chain signals. So I'm going to illustrate this with an example. So this is something that happened mid-March this year, so in 2021. A very large transaction was recorded on-chain. It was a large transfer of Bitcoin going into an exchange. And many data providers spotted that big transfer, Here on the left, this is a screenshot from a site called CryptoQuant, and you can see that there is a big spike. So big transfers of coins like this into exchanges are generally considered to be a bearish signal. And that's because it's likely that someone is sending coins to an exchange in order to sell them. And CryptoQuant has an alert system. Many traders are subscribed to it, and you can see on the right-hand side a screenshot of this alert that went out automatically to almost 30,000 traders, warning them of a massive exchange inflow, so into an exchange, in this case Gemini, that could possibly be a whale dumping. And we're talking about a big transfer. This is 19,000 Bitcoin, so worth over $1 billion. And what you would expect to happen happened. People freaked out and the price crashed almost 10%. A lot of investors had leveraged long positions on the futures market, and we'll talk more about how that works later in the course, but they all got wiped out. You can see that on the left, there was a huge spike in long liquidation. $700 million got wiped out. So that was very painful for all of those investors. And then Willy Woo, he's one of the pioneers of on-chain analytics. He comes out on Twitter and basically says, well, you guys are idiots. You aren't looking at this the right way. We know that Gemini isn't as big and as liquid as other exchanges like Coinbase or Binance. And we know that on average, the BTC USD pair trades less than $200 million per day. That's public data. And so if you were a whale looking to sell $1 billion worth of Bitcoin, you wouldn't send it all to Gemini. That wouldn't make any sense. Whales are smarter than that. And so I don't think we'll ever know what the truth is. And to be honest, it doesn't really matter. Maybe it was a whale trying to scare the market. Maybe that whale had a big short position and made a killing when the price crashed. Or maybe, as someone else suggested, this was just an institution sending coins to Gemini. Gemini also has a custody service. And if that was the case, that's a perfectly legitimate economic transaction. There's absolutely no reason to go into full panic mode. So all of this to say, on-chain analysis opens up the potential for manipulation. Don't get fooled by this. Keep an eye out and always be critical.